Raising funding for your startup is a challenge. How much should you raise? Where do you find investors? And how do you pitch them? In this segment, How to Raise Funding for Your Startup, we'll answer those questions and more. Here are live outtakes with startup founders on how to raise funding. I hope you enjoy this episode. Hey, John, thanks for taking time to join.
Yes, of course.
So good to connect with you now, and just want to learn more about what you guys are doing at Juggle Apps. I've looked at the website, but love to hear more about it.
Yeah, so we are combating social isolation, trying to keep people connected in a world that's kind of lost that through social media impacts and COVID and all sorts of things. And it's leading to record high suicides. New article last week in LA Times, and social isolation has become like a third leading cause of death over 50. And it's a big deal. People are working from home, they're meeting Zoom, they're not staying connected. And so that's what we're dealing with. And we're going to monetize it because it also will impact business relationships. So think about businesses that have high touch, high care for relationships. Think about relationship sales. Think about stay-at-home moms and dads who now have a big economy and, they're earning money that way. There's lots of people like that will pay anywhere from $2 a month to $20 a month for what we can offer. So that's what we're doing.
And what do you offer for $2 or $20 a month exactly?
So we have, first of all, right now we have an app in the App Store and in the Google Play Store that is available for free. And there's also a paid $2 a month version. And there's a web app that is in development right now. We've already got design done. Most of the back end has been built. The front end is being built right now. And that will be launching. We're probably going to slow down our development on that just a little bit because we're focusing on marketing and trying to get launched. And until I pick up a couple of $1 million, I'm going to we're being really smart with our pennies right now. So it may end up launching, I would say in March, maybe April, maybe March if around there. That'll be the web app puts in. That's where the higher price points are.
Okay, it may be launching in April then. That sounds good. Cool. And so you have a minimal version now that you're putting out there. And have you had any engagement numbers or anything like that?
So we've just started kind of getting the app out there. We haven't actually marketed it yet until like maybe last week. So we've only got 1,000 users right now. And we just turned on notifications yesterday. We just turned on the ability to pay last week. So we're just, we've been working on this a long time. We finally have our tech where we're ready to go big. And that's really the reason why I'm raising money, because I've tried to bootstrap this thing as much as possible, reserving all the equity, just ferociously to my own detriment, I would say, and to get to this point. And then that's why I'm kind of waited too long on that process. But anyway, that's where I am.
Great. And so what's the valuation on the deal? Is it a price round or convertible note? And what valuation did you put?
So what I've put here is just kind of an interesting approach, I think, is that, so I raised some money like last year, a year ago right now, and I raised it at a $10 million pre-money safe. Mm-hmm. And that basically spent over $1 billion on the product. We worked really hard, but I'm set up 4 tranches for the $4 million. The first tranche they're all safes, all pre-money. The first tranche is still at 10 billion. And then the second tranche is at 15, then 20, then 25. That's where it's set up right now. Again, I don't know if that's the right way to do it. I may actually not raise the whole 4. I don't think we're going to need it. We've just kind of got to think smart with our dollars. I think we can pull this off for, somewhere between $2 and $3 billion. So again, I don't want to make the same mistake I made before, which is to delay raising money. And if somebody wants to write me $1 million check, I need to take it. But I truly think if we can just get a couple $1 billion in the door, we're going to be marching down the road.
Okay. You may want to make those post-money safes because you'll find investors are very sensitive about dilution, and they're very up on it on safes now more than they were a year ago. It's one thing to consider.
Got it. Yeah, I'd love to certainly. Now, I guess I'm starting to understand your model. And of course, I've had this happen before where I've been approached by people telling me they want to raise money for me. And, it's my understanding, of course, there's very strict laws around that, the SEC, and unless you're specifically licensed to do it, you can't do it. So obviously you've got that figured out, nailed. So tell me about that.
So we're not raising you money. You're raising money and we're helping you is how it works. I started 3 angel networks in Texas and looked at the broker model and found out I was going to lose most of my angels and all my VCs because they don't let brokers in the deal. So I went the retainer approach. And our approach is just like a lawyer or accountant comes to you and they say, I can help put the docs together. I can put your books together, or CFO, I can put your financial forecast together. I'm going to charge a fee for doing that. And that's our approach to fundraising. Is we're really not raising money for you. People we work with are out raising money. They're halfway through the raise and they run out of investors. We're going to help you go get more investors. We're going to go and reach out to our network. We're going to go run campaigns. We're going to go run events to meet with them. We're going to go do mailers to update them on how you're doing. We're going to go fill out the application forms to go to angel groups. So all of the scut work that goes into raising funding, that's what we're doing. We're doing all the scut work. And then you're out, actually picking up the introductions and carrying them through to a close. We have lots of tools and techniques for how to do that. We're putting into place in-person events as well as hybrid events. The world's wanting to get back more in person. It can be hard to close on Zoom. Zoom's good for opening the dialogue, but it can be hard for closing. And so in-person is what we're using for that. And then we're seeing some interest in getting to hybrid, where some people want to be online and some people want to be in the room. And so we're going to kick off our first Austin event end of January that's hybrid. This is what we did before the pandemic. But after the pandemic, everything just moved to Zoom straight away. And the first call was always on Zoom, and that's fine. But what we're finding now is that some people want to get at some point in the process in person to meet them, and we'll be doing that. So like I say, what we're doing is we're helping you find more investors with an investor relations and introductions campaign. But we're doing all the back office stuff that most people don't want to do, all the mailers, all the CRM work. We capture all this on a spreadsheet, share it with you. Weekly progress calls like we're doing now, half hour, go through and see where we are, what the next step is. We're helping fill out the angel group applications. We need a fair amount of support from you because you have the core information. If you have a data room, we use it. If you don't, we'll help you put one together. If you have a term sheet, we use it. If you don't, we'll help put one together. So we just start from wherever people are and start filling in the gaps and start going forward. And then mostly it's online events, in-person events, and it's angel group applications is what we spend most of our day job doing. There are syndicate funds, VC funds that we go through, make an introduction. We have what we call the funding funnel, which is a process for carrying an investor through to a close. Sound like you know how to close investor. I do get a lot of people that haven't dealt with investors before, and we do get a lot of angel investors who probably aren't quite aware of what they need to do on a diligence, and so they procrastinate and they stall out, and we have to move them forward. In-person events is a good one of the ways we do that. We're having an event, 30 days, you have to make a decision. Here it is, you're in, you're out. At that point, we move on to the next group. They come back later, that's fine, but we're not chasing them anymore, and we're saving our time because you can end up with 200-300 investors on these lists that you're chasing, and we need to start sorting through who's going to do something, who's not. We do the three tranches technique a lot. That's a great way to get it out there. We like to run deadline campaigns. And we get 70% of the way through. We're going to close now, put that out there. 6 weeks is a good number. And we start driving it through and we calculate the interest and the committed that goes into it. That means people that are thinking about it, but haven't actually written a check yet. And so therefore we demonstrating that there's interest in the deal from more than just what's in the bank at this stage. So those are the things we do in our case.
Yeah, okay, that's good. So how do you get paid? How does that work?
Well, it's a $3,000 per month retainer, and it's a 3-month commitment. And so it's $9,000 to get into it. Now, I will say we really want to see revenue. So I don't know if we're really ready right now or not. It can be very hard to do pre-revenue. So we're probably going to have to think about that before we actually take you on as a client. Love to have, great technology and great team and all those, no problem. But pre-revenue in this market is going to be really tough. The majority of this is going to come from your network. So why do you need us? So one question we always ask is, have you run out of investors to go to yet? If the answer is no, well, then you got to go to your own investors first. Go close what's here. When you run out of investors, that's when you come to us. And I just, that's how I got into it. I was getting calls from people in Seattle, Chicago saying, I've talked to everybody in my town. Now what? Well, come to us. We'll put you in front of investors in other parts of the country because you don't need to pay me to go talk to your investors, because that's what you do is start with your core and then just draw the circle wider. At some point, you do run out of your investors in your location, Love to have local angel groups and other people in the deal, because I used to get calls from people all the time saying, hey, nobody back home would give me money. How about you? Well, this is not the story you want to take to an investor. They want to see that you did raise money from back home, but they just didn't put all of it in. And now you're just drawing the circle wider. So I think the next step is for you to go and, just carry on with what you're doing there. If you have a question, you got to help it along the way. And when you run out of investors, let's get back together. I think that's the time we would like to engage in this process, because I think that's where we can be more effective. And the problem is when you get the circle wide enough, relationship no longer really matters in the discussion. In the early days, it matters a lot. As you go further away from the center, it matters less. And by the time they get to our investors, it's very much a financial, a numeric, a quantitative. Do they have the traction? Do they have the numbers? Do they have the growth rate? And with pre-revenue, I found that was very hard to do. What we wanted to also see is the growth story. We're able to put out updates every week on sales, team, product, and fundraise. Those are the core 4 things. If you're in revenue, that's really not hard to do. If you're pre-revenue, I found I would normally get 2-3 updates and then they'd run out. We told you everything. There is nothing else. And nothing else is happening right now because you have money. That's not a fundable situation. So we want to avoid those and just basically say, when you have revenue, well, usually there's something always happening around generating leads, closing sales, talking to a customer, finding a partner, generating a network. There's lots of things that go with that really generates the updates, because now the team is expanding, now the fundraise is expanding, and now the product is usually getting better because they're giving you feedback on it. So I think that's the next step is let's circle up in January, February and see how it's going with your campaign and see if it makes sense for us to come in at that point, because you got these 2 guys here to close already. So by all means, don't generate from us. Go close these guys that you have. What are your thoughts there?
No, that makes sense to me. We are pre-revenue. We are getting some good feedback from customers. We are iterating our product very quickly. We're making changes more than once a week, and as far as with new updates, launching them. And so that's good. But yeah, I think, look, at the end of the day, we're going to, the truth is, it's a lot like my bankers, when you don't need the money, then you can get it pretty easily. So.
Well, if you have the traction, you'll find that there'd be so much more interest in your deal. You'll get so much further with investors. Now, family and friends, that doesn't really matter. We believe in you, believe in the product, and you have some customers that often sign up because they believe in the product and you. And so certainly those are the ones you want to be closing right now. And you want to keep track of it. It's basically a sales process. So just like selling a product, you're selling equity in your company, you have to have a lead funnel. You have to be warming up the leads and taking them through the process, keeping track. Most importantly, you have to follow up to close. I'm amazed how many people come to me thinking that they're just going to give me a pitch and I'm going to go chase them down to get them a check. Well, that's not quite how it works. You have to go back and ask for the check. And in many ways with angels, you have to work it through the process. You have to send them the pitch deck, explain it, then you have to send them the term sheet, explain it, as you go to the due diligence and explain it. And you work your way through it as baby steps is all the way through. So it does take some time to get those angels through that are not family and friends, because they're learning everything from scratch, of course. So those are some things to consider.
Well, yeah, let's circle back in February. Let's do that.
Okay. We'll do that. We'll come back and see what we can do then and see how it goes. But it sounds like you're on the right track, and looking forward to seeing next steps.
Okay. Sounds good. Okay. Thanks so much.
Have a good one. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.